Welcome to your Mortgage Insider Update for February 23rd. We had an interesting week at the very last of last week. The PCE, which is December's Personal Consumption Expenditure Inflation Report, came out Friday morning a little hotter than expected. That was for December. So we've already recently received the January Consumer Price Index, or CPI, which was less than anticipated. So not a lot of movement from the inflation report, but on Friday we also got the Supreme Court's ruling on the U.S. tariffs. So basically struck down all the tariffs that President Trump had applied on all the other world economies as reciprocal tariffs. So some question marks whether or not that is going to bleed through as far as higher inflation. Now, you would think that no tariffs would reduce inflation, but the worry has been that right after they announced this, Trump came out and said he's going to apply new tariffs under a different section of the law. So a lot of unknowns. I think it makes for a rocky start to the beginning of this week, with no other major news to come into play. The Federal Reserve's not going to meet for another couple weeks, so not a lot to move from. But so far today, flat on the 10-year Treasury. It was up a little bit at the end of last week, up slightly, this morning. Mortgage-backed securities actually being very resilient in the face of this. So we'll take a quick look and give you a breakdown on where rates stand on Monday. So as I said, the 10-year Treasury actually pretty flat, 4.09 is a bit higher. We had gotten down to 4.05 last week, but mortgage-backed securities resiliently higher, 13 basis points. We're going to first take a look at the 10-year Treasury as a barometer. And with the news around tariffs, we can see that we bounced off the bottom from February 17th, last Thursday, then Friday, quite a bit of a move during that day, starting this week off slightly higher. Not nearly as high as we had been just in recent weeks, so not a bad start, but definitely puts in question what the tariffs and the future outlook on GDP and just global trade, what that'll mean to mortgage-backed securities beyond just what the 10-year Treasury shows. On the mortgage-backed security front, we'll take a look at that in a little bit of a deeper dive. So we're actually breaking just above the highest level that we had seen this year, first breached briefly back on January 9th before it was retreated. Then it's bounced along a couple times, including last week. So far today, starting off a little bit higher. It's still early in the trading day, so this could pull back a little bit, but a break above this Fibonacci retracement could be a good sign on interest rates to come for mortgages. So when it comes to the history and this Fibonacci retracement line that we're just breaching right above right now, we have to go back all the way to September of 2024. Now, if you'll recall, that was a point where we had hoped that the Federal Reserve would start to cut interest rates. They thought inflation was being handled, so the rates, the mortgage-backed security prices rose, which was actually lowering interest rates until it peaked and then sank significantly. So this drop in the mortgage-backed security price meant higher interest rates in the fall of 2024, which we all experienced. A lot of movement that year coming into 2025, where we had overall throughout the year slow improvement with interest rates coming down as the mortgage-backed security price went up. So just for display here, this is a breaking point that we've actually been able to be stabilized just right at this level, and any break above could take us back to interest rates we hadn't seen in quite a few years, back to 2022. So we'll keep an eye on it this week as things start to play out. There might be a lot of fireworks this week. The president will issue his State of the Union on Tuesday. There's been some major news with just our southern border here in Mexico with some violence that's broke out. So we'll see how that all plays out as this week begins. Have a great one.